Hello, everybody. This is the weekly wrap where we take a look at what happened last week, review our portfolio, review the trading ideas that we have, and the general state of the market where it is, where it looks like it's going to try to go. Last week markets again positive. For the year, they're up, and not spectacular gains, but after 5 years to still be making gains is in itself quite a feat. And if we do a quick review here of what's happened, the equities in general across the world, they lifted last week as that bond sell-off started to ease. Let's look at that first. If you remember on Friday, I was trying to get a trade into the portfolio on bonds. So essentially you had this big drop, went from, this is on the 20-year treasuries, from 131 all the way down to about 119. And that move, that uninterrupted move, that amounted to roughly 9% in roughly a month, which is a big move in bonds. That move put a lot of pressure on equities, and as it got down here, it started to stall, volume starts to escalate, and then you get a day of no volume. Sellers have run out of steam here. That was the reversal. But essentially, as this market stopped selling off here, is where and when we saw equities turn around and head back up. So if we look at the S&P 500, that first day of selling in the bonds is reflected here. And then, as the bonds gyrated around and then essentially quit going down, had no more volume, looked like they were turning. You got the reversal on the stocks. And this was pretty much true not just here but elsewhere, particularly in Europe as well, with the German bunds doing the same thing. So, that really probably was the biggest event last week. The ranges that are overseas continue to be built out. So if we look here at the CACs, for example, you get the push down, hammer reversal, you come down, you test into it with no volume. And even though there was a sell-off on Friday, this to me still looks like it's going to try to work back higher and work back into this range, that's developed. So if we draw the big range, you've got a range that's about here. That's about the halfway mark. I expect it's going to try to get back into this area and test into it again and try to get up here. Now I don't know if it's going to immediately, but this is what it's doing now. It's trading these two ranges, and it's trying to decide, can it get back up in the top? And I expect this week you'll probably see it try to. Whether or not it does is a different question. The one thing that's key here, and we're looking at the French market, is that you got underneath this low, or actually you got into this low. You tried to break underneath it. You didn't. You did break underneath this one. Then you got over it, right? Well, actually, you got over it here immediately, and you're back over it again now. This to me tells me that this more than likely is some sort of a sideways range for now, which is kind of what I've been talking about, and that is that you're going to build a range, and then you're going to trade in it. Now, the fact that it's as big as it is, right, makes for fairly large moves up and down. And so that gives, while this range builds out, that gives one the opportunity, A, to play that range, and B, to try to build a larger position with the expectation that at some point this range is going to continue, or actually this move is going to continue to the upside. So what I'm suggesting here, and what I believe makes sense to do, is to look at the prior range, and the bulk of it was here, and then you say, okay, so it projected forward, now it's building out another range. If this ends up being the range inside this, right, then we can expect another move up above it at some point once this builds out far enough. And so the ideal is to continue to buy in the bottom of the range, and if we're wrong and the range ends up being deeper and it's the whole thing, right, then you just have to buy it back here again as well. But you have to have that as part of your plan. The ideal is I want to take, whatever the position size is, as this builds out, now that we have some sort of a bottom here, or at least the expectation that that might be the bottom, then we want to take our position and go from 10% long, in terms of the size that we're holding, to 20% long, maybe to 30% long as this builds out, with the expectation that it's going to get back up here and eventually break out. In the meantime, you're taking some money off the table each time this thing comes up and down, right, as you build it larger and larger. That's the ideal of a range trade, especially a one-way range trade, which I think this is. I don't want to be shorting this market. I only want to be buying it. And so I want to be selling into strength partially, and then on retraces, once the range tells us where the bottom may be, on retraces back towards that area, I want to increase those positions. That's kind of the ideal behind range trades, especially unidirectional ones. Here's the DAX did exactly the same sort of thing. This is not an appetizing picture until you look at the weekly, right? You had a huge run up, now you're working some of it off. That's perfectly normal. It's not, that's not a bad thing. And if you think about this in terms of, where is this market now and what's the fundamentals behind it, well, you know it as well as I do. The fundamentals behind this is QE. Cheapen the currency, drive up the equities. We've seen it, for 4 or 5 years now in various countries. Now they're doing it here. What does this mean? It means it's probably halfway through its trade. As long as they stick with the idea, you get a move up, a pull back, another move up, right? Another pull back, probably one more large move to the upside eventually. And so what you want to do is you want to try to make certain that you accumulate some of it while it's in this area. So that's the whole ideal here. So technically here, the positives, the dollar looks to be range bound. The bonds we just talked about, let's look at the dollar here. If I pull it up, pretty big move down, right, percentage wise. I mean, we're looking at roughly a 6% decline, from here to here again in about a month span. So just like we saw with the bonds, we're seeing the same thing here with the dollar. Right now, the dollar hasn't shown that it's going to turn. We saw the volume escalation and an attempt to come back out of that, but then in a further breakdown, it just completed another small ABCD down. If I look at it on the weekly, the key test is the one I've been pointing out for a while, 2443. That's where it's trying to get to. It's coming into it with a little bit less volume. I suspect it's going to test it this week. I suspect, after this big run, it's the same sort of idea, is that this thing is building out a range. We just don't know where the bottom of the range is yet. Is it going to be here or not? Given the way this thing has declined, I expect it probably will be here for now. But we don't know that yet. We'll know that soon. When the dollar finds a bottom, right, that's going to put some pressure back. Well, it'll go sideways probably, right? But you'll get a bounce out of here to start with. And that's going to put some pressure on overseas equities that have had their runs, which is going to continue their ranges, most likely. If we look back at our markets, the thing that's happening over here with the S&P making its move is that you've got financials trying to break out. They pushed up, they broke out. They're kind of sideways winding up here to start with. They're right at the highs on the weekly, trying to get to the highs, the other big sector. And these two sectors account for the majority of the S&P 500. And this is the technology. It also is up here testing the highs, trying to get over them. So when I look at the two biggest sectors in the S&P 500, both are trying to work higher. That's what's supporting this move and allowing this move to continue at this point. So, if I'm watching something, I'm certainly watching these two sectors. Finally, the NDX itself is moving back up towards the highs, breaks over a swing point high here, but more importantly, on a weekly basis, it finally gets over and holds a breakout on the swing point high, and it's doing it with volume. It's not quite as much as suspect, but it's almost the same. And so again, continuation of a range stretch right to the top side. Now, do I think these things are going to, just drive us up higher? No, I really don't. I think that, if we look elsewhere, the Russell's still showing us negative divergence a long way away. It's just coming back up to do a retest regen. It's more than 6 bars, so I expect it's not going to get very deep into this. So the Russell, on the flip side, it's not suggesting that we're going to make a big move up. If that dollar starts to move up, that's going to keep pressure on equities and will, of course, affect the large cap equities, the S&P 500. So, when I look at that, it's like, okay, yeah, we're making a move, but is it going to continue? I don't know. I suspect things are still range bound. I don't think this has changed. I suspect this is going to play out for another month or two at least in general around the world. The rest of the world much stronger than us, though, and that's where we should be playing. That's where the sandbox has a lot of sand. Fundamentally, the positive central bankers and mergers and acquisitions. I mean, this stuff just continues every week, week in, week out. More announcements, more money. And why is that? Well, in my opinion, it's because you can't organically grow, so you go buy somebody. You try to position yourself for growth by buying somebody else. And I believe that's what continues to drive this. In a way, it's positive that it keeps happening, and that's because corporations have so much cash. As far as, is it positive that you can't grow? No, that's not positive. And so you kind of get, a negative and a positive wound up here together. Fundamentals is just what we were just talking about. There's, growth is not there. It's just not happening. And we're just sputtering along, quite frankly. What would I be watching for? Those bonds, did they really bottom out? Will the comp and the index actually break out, or will they simply get to the highs, S&P break out, and then they all pull back again? I expect it's probably going to be the latter. As part of that, we'll have to watch the financial and technology I just talked about. Europe, is that range bottom in? I suspect it is, and I think that's going to try and trade a little bit higher. And the same in Asia, and I didn't point out Asia. I can pop those stocks up as well, or those markets. It took it a while to play out, but if you look here at the Hang Seng, that I was wanting it to get back this deep. It just wouldn't do it. It held up here at this higher level, and now it's coming back to try and get back over this kind of halfway mark between these. So the Hang Seng, it's range trading, and it's trying to head back to the top of the range. If I look at the Shanghai market, it's also range trading. It looks a little different. The range is here, and it's about there, and so you can see it keeps fighting between the top and the bottom. Pulled back a little bit last week, but again, it's range trading. So when I look at, I look at the world is doing okay. Europe ranges, Asia, same thing. So range trade, I think, is going to be what we continue to see. Next week, there's not much data at the beginning of the week. Monday through Wednesday, nothing. Thursday, a lot of data, a lot of economic data. And then Friday, don't forget here, Yellen is going to speak on Friday afternoon. I really wonder if she's going to try to temper the market again with some comments. In terms of, the last time she spoke, she talked about markets being a bit overvalued. I wonder if she's going to continue that theme, and if that's going to give pause to the market as well. What's my bottom line? There's just no sellers still. Every time this market tries to move down, sellers disappear. Conversely, every time it's tried to break out, the buyers have disappeared. So we'll have to see if the buyers really want to pay up to get into this market. I suspect that's not going to be the case. We're going to get maybe a little push, a little breakout on the S&P, and then we're going to get pulled right back in. And so that's kind of what I'm talking about here. As I mentioned last week, I think the market internals, from what I look at, they're still not that positive. It's just another divergence that we see, just like the Russell, where, this market is not in sync. In other words, it's not firing on all of its engines. You don't have, the earnings didn't support it. The economics don't support it. What supports it? QE, pure and simple. QE around the world is what's supporting the market, and it's what's keeping it going. I'm going to talk about the portfolio. I'm actually going to do another broadcast that I'll send out in conjunction with this one afterwards, looking at the spread trades. I've talked about spreads between gold, GLDI, which is an ETN, and DGZ. I'm going to walk you through that trade in a separate video, so I'm not going to talk about it here, but be aware that's coming, and you'll want to check that out. As far as the portfolio, the ideal here is still the same. You buy the retraces, you sell some of the spikes, and as we get farther into this range, you sell less of that you've bought, right? And you buy more every time it comes back down. The idea is that you want to accumulate, make your size a little bit larger as time progresses, so that when the breakout does come, which is the expectation, you have a larger position and you've been able to trade around it with a better price point in between. Last week, I've been doing it, took some profits on spikes, bought some stuff on dips, in particular Apple, I'll talk about it. And then I'm still looking to buy other things on retraces. Apple, let's look at some of these stocks and talk about what we're doing. Last week, as I was thinking about Apple, I was thinking about these markets and whether or not they can trade higher or not. Apple, of course, the big spike here is the earnings. Goes up, spikes down, right, sells off. That pretty much tells me Apple's in a range trade. Now, it left volume at the top, so that says that, hey, the range really is to the top. And in between it, right, there's kind of this other range that's going on. And we could actually draw that a little bit lower, make it equidistant, but you get the idea. The idea is that Apple may or may not be trading, in this bottom half of the range longer, or it may trade in the top half. By taking a position, I'm hedging my position. I'm hedging my bets, and I'm saying I don't want to take positions in the indexes themselves. I want to take a position in the strongest stock in the indexes, that if the indexes go higher, this one necessarily will go higher as well. And so I'm looking at Apple as that kind of a play. If this turns out to be the top and Apple comes back to the bottom again, then we'll simply buy some more at the bottom. If we look at Apple, turn it here, put it on a weekly, you can see the ranges in Apple. I showed you this on the trades that when I entered it, you can see these ranges that had taken place. Apple just trades sideways and then eventually makes another move higher. And so, the ideal here is that eventually that's probably what's going to happen. So, I want to be a buyer of Apple on retraces. If I look at the weekly chart, the place that I think Apple could come back to potentially is this bar. So we have to be prepared to buy back into this region if it gets there. And so, does it break out now? Probably not. Can it trade to the top of the range? Yeah, it can do that. It can trade back up into this little area. If it does, we'll sell some of it and we'll try to buy it back cheaper again. If it makes the move all the way back here first without ever getting higher, then we'll simply buy back in the lower range here and again down here. That's part of the plan. That's the way I'm looking at Apple. Great company, great products, continues to organically grow unlike almost any other company. So, that is kind of the company you want to be in. Core position, we'll just trade around it and eventually with the idea that it will go higher. If we look at some of the other positions, I don't want to dwell on these, but I've already talked about Asher, for example. This is China. As it comes back, you want to buy it. As it goes up, you want to sell it, and you want to slowly make your position larger with the idea that this, of course, will trade higher in the long run. I took a position in the EUO last week. That's underwater right now, but again, this is just like that dollar trade. As it comes back into this big bar, I want to buy some more. This is going to turn. Had a big move up. This is the inverse of the euro. Had a big move up. It's simply consolidating. It's another range that we can trade with the idea that eventually the euro is going to come back up towards this top, this 28 area at least. What else is important here? Oh, Starbucks is another good one. Starbucks, again, this is an earnings play, an individual stock. Just like Apple, they continue to organically grow. That's the sort of stock we want to be in if we're going to be in any of them. It came back. It's made a range itself. It made a deeper range than I expected. We bought some back here as it came back. I'm not sure exactly where we got in. We sold some as it spiked back into this bottom. It's gotten into it now. If it can hold into it, it potentially can go to the top. If so, then we didn't get the best buy, which means we'll have to buy it again when it comes back down here. I doubt it's going to break out. It's probably going to consolidate. The ideal buy now is to come back to this little range and buy it there. We have an order sitting there. And then again, if it wants to trade lower, buy it again down here. So, you just have to pick those areas that look to be the best spots. You sell into some of the strength into areas that it should fail if it's going to, which would be up here and be there. If it comes back, you can buy it back cheaper, build a position, make it larger, eventually with the idea that it tries to go higher. Okay, so you get the idea, you get the gist of what I'm doing here. Nothing else to say. I like the way the market's trading overall. I think that it's probably range bound, just as we've talked about. I think most of the better trades are overseas. We're at about a 30% position size right now. It's the wrong graph. I was going to grab the, I think I have it. I don't have it. It's about 29-30% right now in terms of the portfolio. We want to build that up as this range builds out to 40-50% and want to put that gold spread on for the rest of the money. Most of that money we want to be located in a couple of strong stocks domestically, but a lot of it overseas. And then I'd like to see that gold position be able to trade around a 20-30% position size. That video is coming up. I'll have it out to you here in a bit, and we'll talk about that. That's where we're at. I can't get too negative on these markets. I do realize that, as I've said before, there's the potential for a larger move down if it happens. I mean, the structure is in place, but we're far enough away where we have to continue to go with the trend. We're always going with the trend, aware of where the potential risk lies, and trying to find those strongest stocks, ETFs to be in, especially when risk is higher, and that's where we're at now. Okay. All right, that's it for today. I'll send you another video clip here after this one's done. Thanks, as always, and take care.